Good day everyone, I welcome you all to today's tutorial on AFS FOREX channel. Today's we are going to deal with, first I want to deal with how to use your main screen, your main window screen, that this is your main chart on your boom and crash, to know how you're going to use this your main chart to know the trend that the market is going. Because a lot of people have complained and reached out to me to make videos that will enable them know the trend, because when you are trading against the trend, you are going to lose all your funds. So it's advisable that you trade with the trend. So I'm going to teach you how you can be able to determine this very easily, and it's going to be profitable. If you look at the trade I have entered, this is trade I entered this morning, you will see that I'm already on profit. If you look at it, I'm already on profit. This is where I took the trade. 06926.8950 is where I took the trade, because I have all my indicators have already showed me that this is going to be a downtrend, that is going to go a downtrend. At least I'm going to make not less than $7 out of this market before I close it. Now, one thing I want you to see is this. This is what I want you to see, that setting your market, determining the trend that your market moves. I'm going to show in this video, I'm only showing you what is happening in the main window. So this is what you're going to see. You are going to use these indicators. The indicators I'm going to use, I'm going to show you the indicators I have already studied this for months, and is 100%, okay, let me say 98% correct if you do it the way I have set it. So let's go to indicators, and I'm going to show you the indicators I'm using for this. Now you're going to use Bollinger bands 100 period 100 derivation 2.000 shift 0, apply to typical price, so that you will know the typical price, you will know the exact price. You're going to use your style and your pixel, depends on what you want to use. Then we're going to use first moving average. This first moving average is going to be 95. You can use 90, 95. Shift 0, method simple, apply to close, style 4 pixel, choose your color. Then thirdly, you add another moving average, which is going to be 750. The moving average we are going to be using to determine the trend is going to be at the range of 800 to 700. So depending on the on type of device you're using, I will advise you that you study 700 to 800 to know the one that best suits you. I'm going to go forth to explain much, but I'm using 750, shift 0, linear weight, apply to close, 4 pixel. Use 4 pixel because this should be much more pronounced than all other indicators. Then the last moving average, you're going to use period 90. Remember that the first moving average was 95. So if you're using the first moving average to be 80, make sure that the second moving average, the last moving average, is going to be 85. So we use our first moving average as 95. This last one is going to be 90. Difference of 5. Then shift 0. Method linear weight, apply to close. Style is 4 pixel. Choose your color, any color that best fits you. So after you have done that, please go back to your main window. Let me now explain to you. These lines that are here, I want to show you the lines. These are Bollinger Band lines. This line that run across to this place is Bollinger Band line. The Bollinger Band has 3 lines. These 3 lines now is what we are going to use. We are going to be making use of these 3 lines. Now, the 750 moving average is this one, the biggest one. This one is the 750 moving average that we have set. 750 moving average. That is it. This is the 750 moving average. This is 750 moving average. Then the 95 moving average that was set, the 95 is this one on red. That is the the 95 is this one on red. The 95 is the one, sorry, this one, this blue is the 95. Then the second one that is 90 is the one on red. Sorry for the mistake. Then this one down here is the 750 moving average. I will repeat it once more. The one here, this one here, now here, is the 95 moving average. Then the one red that is close to the center, Bollinger Band center line, it's the 90 moving average. Then this one here at the bottom is the 750 moving average. So now I'm going to explain how this moving average determines the trend that the market is. It's very simple for you to note. Very, very simple for you to note. Just follow me and you're going to understand it. Now, let me go back to the market and show you what is happening. This is crash 1000. What you need to expect is that every of the candlesticks is embedded inside the Bollinger Band, inside it. That is it. All the candlesticks is inside from here down here. Sometimes it escapes a little, but it will still come back inside the Bollinger Band. Now, this is going to be our strength to determining the trend that the market is moving. So whenever that your 95 moving average intercepts, this is what I mean by intercept. They meet at a point. See what is happening here. Whenever they intercept, the 95 moving average intercepts with your middle center Bollinger Band line and your 90 moving average. It shows you that the market is going to follow that trend. But first, listen carefully for you to understand. If you are in crash 1000, it's advisable you sell, because it's advisable you trade. This strategy works best when you want to get spikes. You trade on spikes. I'm going to also explain, make a video that will show you the best time to enter the market when the spike is being expected. Now, looking at it this way, you will see that this 90 moving average crossed this spike, cross this 90 moving average down here. That simply means that the market has crossed the strong buy level. Strong buy level. Remember, if you have watched most of my video in this channel, you understand that at 90 is always in 90 in crash, and 95 in crash is our strong sell level for crash. Why for boom is the other way around. So now in crash 1000, crash 500, whenever a spike cuts these three lines, whenever a spike cuts these three lines, you are free to enter the market. Now if you enter this market, before this market is going to a kind of change direction, it must, when I said must, it must meet this line, the 750 line. The market must meet the 750 line before any changes will happen in this market. So if you enter in this place where this cut has been made, you're going to take this trade down in this place. When it comes to this place and it cuts this line, this 750 moving average lines, allow the trade to go on. It shows that this market is on a downtrend. Just look at it. It shows that this market is on a downtrend. Just allow the market to go. Okay, sorry. This is the last phase. But it shows that this market is on a downtrend. I've entered a trade and which I'm making profit. I will leave it. I will still come back to it. You will see what will happen. It shows that this market is on a downtrend. Now, if you are going down, you will see what I just explained. For example, when you want to collect candlestick scraping, look at what you need to look before you actually enter the trade. Make sure that these candlesticks cross this line. It crossed this line. This is your first indication. It crossed the 95 moving average. Then cross the center interception of 90 moving average and the Bollinger center market price. This is a kind of, you enter the market, you are inside the market, you're buying things, and this is a kind of the center, the middle price that you can get. So when it cross this 90 moving average, intercept with the Bollinger Bands center market price, enter this market. Is going to move uptrend till it meets the 750 moving averages. So if you are doing candlestick scraping, from this point to this point is more than 100 of, let me just say 50 candlesticks, and you will be in dollars in profit. Then if it comes to this place, if it comes to this 750 moving average, I will advise you to go out of the market. Because before it hits this last Bollinger Bands indicator, things can change in the market. So you can go out of the market here. Collecting, this is candlestick scraping. But if you, after going out of the market and you watch this line pass this 750 moving average indicator, you can go into the market once more. Enter the market and allow this trade to go. Look at what happened. That shows that is entering uptrend. This is where the trend comes. It's going uptrend. See what happened. It's going uptrend. Now let me go back to the market and show you more. It's going uptrend. As far as this 750 moving average, this particular moving average, the candlestick crosses this 750 moving average and is going up, start buying. Just enter your buy level and enjoy the ride. Look at the ride. Enjoy the ride. It's still going to go up because this actually just indicated that this market is entering into a long uptrend. That is what it indicates. So you enter this market at this position if you want to take a long trend. Just enjoy the ride. Okay. Another, if you look at this particular position, you will see what I mean also. The line cuts here, 750 line. You can take it both sales and buy position. This is 750 line. This spike cuts this 750 line here and cut the 95 and 90 with center Bollinger Bands indicator. And look at what happened. That is not all. Look at what happened to this position before the market changed. So if you take this ride, collect these spikes to this position, you will be not less than $20 profit, even when you are using the lowest loss size. If I don't want to go further to show you, because if you look at it, is like that, like what I said initially, 98% correct. Look at what happened here. Hold on. Look at what happened here. This is uptrend. Look at what happened. The same thing that happened. So if you follow it with only the main screen, if you're following this strategy with only our main screen, this main screen, you will be on profit. Without your indicator window one, with only your main screen, you will be on profit. Now look also, see what happened here. See what happened at this position. The same thing I said. This spike here cuts the 95 moving average and cuts the 750 moving average. That shows that this market is entering into a long trade, into a long trend. See what happened if you enter the market. The same thing that I've just showed you is still the same thing that is applicable when you are dealing with boom. Let me go to boom 1000. The same thing that is applicable on boom 1000. Look at it. Before this long trend, you have seen the long trend that we entered. See, before this long trend started, look at what happened. This spike, okay, this is candlesticks because it's going down trend. This is down trend on boom 1000. Look at here. What happened here? First, what happened is that this particular position, the candlesticks crossed the 750 moving average, crossed the 95 moving average, crossed the center Bollinger Bands with interception of the 90 moving average. And look at what happened. Look at what happened. Look at what happened. So you see that you're going to be on a profit. And if, for example, you were here at this last before this spike came now, and this spike came, and you saw that it crosses this particular moving average once more again. Let me take this thing down. This I mean this position. You are enjoying your ride, and you have seen that when the spike came, it actually intercepts here. It crossed this particular place again. It crossed the 95 moving average and the 90 moving average. Go out of the market, because it's showing you that this is going to go far a little, but it does not mean that the market is going to, before the market trend is going to change. This market trend is going to change if and only if this spike can go forth up, can go up and cross this line. This is the 750 moving average. If it can cross this 750 moving average, then the trend is going to change. But if it did not cross this line, still enter your downtrend and still continue the ride, because the ride continues. That is it. If you check other, this is okay. Okay, that's the same thing that is happening in the market. If you look at it, the same thing is applicable in all of it. Look at what happened here. Look at the interception and look at the movement. Down, way down, without anything that is happening. Okay, look at this market that I've entered. I want to enter another market. I want to take another market now. This particular trend is still on downtrend. Even as you can see it, that is too long, but it's still on downtrend. Why? Now, okay, see what happened. Let me use this as an example now. Look at what happened here. You see what happened here? Very soon, a spike is going to come. Do you know why a spike is going to come? Now, this spike have already crossed the 95 moving average and the intersection of 90 moving average and the center Bollinger Bands line. So that simply means that in a short while, this market is changing. In a short while, we are not determined whether the trend is going to change or not, but what I know is that this spike is going to come very soon. So I'm going to enter this market here. On a buy position. Now we're loss of 0.07. I'm going to close all these positions that I've entered. Going to close all these positions so that in a short while we're going to come back and see what happened in the market. It's best to trade with spike than to trade against spikes, because if you're trading against spikes, one spike can actually take you down, So the same thing that is applicable here. Look at what happened here in Boom 500. Look at what happened in this particular position. This is the point of intersection. First, the spikes cross where it was here and it crossed the 750 moving average. That shows us that this is going uptrend. It's going up. And as you can see, it cannot go back to the 750 moving average. It's going to go right up. And that is what is happening in this market right now. If I go 15 minutes, you're going to see what is happening. If you go 15 minutes, you're going to see what is happening. Look at the point of intersection here. This is the point of intersection. In 15 minutes. Point of intersection. Let me go back to 15 minutes. I made a mistake now. Okay. No, let me go back to 5 minutes. Something closer. This is the point of intersection here. If you can see it, this is the point here. This is where they intersect. Then look at the right. This determines the trend. That is the quick trend. This you just need to enter this market. Make sure that you are trending. You are moving with spikes, not trading against spikes. Put your stop loss and go and relax. Just relax. And you will see what will happen.